This session is being recorded. A very good evening. Today is 27th of November 2024. I would like to thank everybody for joining today's session. I'd like to thank you for your valuable time on behalf of NCM Global, NCM Financials Dubai, NCM Investment Kuwait. I'd like to welcome you all aboard. And I say it always in my webinars that I have always this major responsibility. The first important responsibility that I have for you is today is I want to make sure that you get your time's worth. We are living approximately in Middle East, and GCC money is not really a big issue. If anybody asks us to order even a pizza or burger, invite us to any dinner, it's totally fine. But if somebody asks you to give you 24 hours of your time to spend a day with them, this is something that everybody would think about multiple times. So my job is to make sure you get your time's worth and deliver and give you stuff of value. Our subject today is we're going to be talking on our webinar here is about investor style trading strategy. This is part one. The part one of all our online training programs are through Zoom. They are online and they're conducted on monthly basis. The part two and part three, they're always hosted locally, physically in our offices, whether our office is in Dubai, in Kuwait, in Jordan, in Turkey, in Labuan, etc. Okay, so bear with me, bear with me. Only the first 10 to 15 minutes are going to be boring. It's going to be more theoretical. Okay, I do understand there are people with least amount of experience, there are people with more experience, but me as an instructor and trainer, I have to take everybody with me. My name is Mahsin Khan and I am the head of NCM Global's educational wing, which is NoorCM Academy and NCM Institute. I take care of the client needs, which are all related to their learning, education, and development in the world of financial and capital markets. So that's a quick introduction about myself. Okay. So, but most important thing, first of all, let's go through a disclaimer. Okay, let's go through a disclaimer. Please take your time to read this disclaimer. Financial markets are risky. Of course, it's an online business. It's a kind of a business model that you can use online, but they are risky. Please do not invest money that you cannot afford to lose. Do not use your children's education fees, parents' medication bills, money, car payments, mortgage payments. Don't risk that stuff. And it's better to consult with a certified and licensed financial advisors because before you make any risky financial decision. So please take a few moments just to read and go through the disclaimer. Financial markets, of course, they're not only very risky, they are also very rewarding. The secret sauce, the secret ingredient that leads to successful financial trading journey is money management and risk management. But because we have limited time here, everybody has commitments. So we will try to do our best in this limited amount of time to give you best information. Now, everybody, you have a decision to make right now. That decision is that if you want me to work officially, if you want to go through, if you want me to do the presentation formally, it is only 20 minutes. But if you really want me to teach you something, to show you something really cool, something that you will like, something you will be able to practice and try to get results from, this could take more than 45 minutes. So please make a decision and tell me, what do you want? Do you want me to go through the presentation formally and finish in 20 minutes and that's it? Or you really want to learn something good and you want me to take my time? And it's if it's okay to finish in 45 minutes or more. Can you tell me here in the chat box, please, everyone? How do you want me to do this presentation, do this training session today? You want official session? Great. Thanks, Mr. Rajiv. Thank you, Miss Maria. She is asking for a formal session. Let's do a slight vote. So I've got one participant requesting for me to take time so I can explain things better. Okay, for those who have time restrictions, for whom The time constraint element is there. You'll also get the recording of this session as well. Thank you, Mr. Nasser. Thanks for confirming. All right, so let's start. Great, Miss Pretty. I'm going to cover everything for you. So these are our topics for today. The first, I've divided this talk, our webinar today in 3 phases. The first phase of the presentation, the first phase of the webinar is the theoretical part. We're going to talk more. It's going to be more talking. The second part is the technical part, where we'll use the trading platform and try to understand it. The third part is going to be the practical part, in which we will discuss the methods. Okay, so we're going to talk about what are the international financial markets, what is the role of a regulated broker, because there are many scams going on online. We're going to talk about how to identify a regulated broker, what are the qualities, properties, how does a regulated broker look like, what are the features, and we're going to talk about what's the difference between regulated and non-regulated brokers. We have to give you some basic idea before you make a financial decision, before you open a trading account, before you put your money in. What are the important things that you need to consider, you need to research on before you open a trading account and deposit money? Okay, this will help you in the future. Then we're going to talk about what are the type of trading methods, what are the type of trading styles, who uses what. Okay, so we'll talk about what is investor style trading strategy. This program, this webinar is for people less active, but they want to have a decent productivity. Okay, whatever I'm going to share today is just my personal opinion and experience. NCM Global and their staff is not liable in any way how you use this. Our suggestion, do go for a demo account, open a demo account, practice account. It's also called paper trading. And the methods that you're going to learn there, try to apply them there. So we're going to talk about the investor style trading, learn how to identify unique investing style and tailor your strategy and methods accordingly. We will talk about position trading. Investor style trading is more like position trading. Now, if you want to start taking notes, you can start taking notes. There are 4 types of trading styles. The first style is called scalping. The first trading style is called scalping. I'm going to go off topic as well. I'm going to talk away from the slides as well. That is for your own benefit, so you can know more. And I'll do my best. I don't use technical language. I don't use difficult words to show off my experience. So first type of trading style is called scalping. Scalping is a trading style in which a trader goes for least amount of pips or points and tries to finalize, conclude, or close his trade, whether in profit or loss, in less than 5 minutes. So scalpers are people who are using 1-minute chart, 5-minute chart. They get in and out fast, very quick. It's 5 minutes or less, and some people, they even do in 30 seconds. So scalping requires a lot of concentration. It is stressy. Some people can handle stress well, and some people cannot. Okay. Now, just a tip. What are the good trading products when it comes to scalping? If you want to write down, when it comes to scalping, there are 4 decent trading products that are preferred by professional traders. Of course, the first one is gold. Second, you've got oil. Third, you've got NASDAQ. Fourth, you've got Dow Jones. And fifth, you've got yen pairs. Pound yen, Aussie yen, Canadian yen, USD yen. Okay, if I go fast, if I'm speaking too fast because I have a habit of getting excited too much, you just have to say in the chat box, please slow down. If you have any questions, just feel free to ask. Don't feel shy. Don't hesitate at all. It's not embarrassing at all, because financial trading, it is related to money. All right, so don't feel shy at all to ask any question. The markets, Mr. Rupesh is asking which segment is more active. Mostly precious metals, and the energy sector is more active, and the yen pairs. Okay. Second trading style is called day trading. And what is day trading? Day trading is a trading style in which the financial traders, they finalize their trading orders or their trading position within the span of 24 hours or before the end of the official trading session. So scalpers get in and get out fast. They take 5 minutes or less. Day traders, they can take 15 minutes until few hours as well, but they try to conclude stuff in 24 hours span. Okay. Third one, the third trading style is called swing trading. Swing trading. Swing trading is a type of trading style in which traders hold the positions or their trading orders from few days to few weeks. This is what swing trading is about. You let the trade swing, you let it float, you let hold on to it. That's what swing trading is. Okay. What is position trading? Position trading is a type of trading method which is most often used by investment services company, investment management, hedge fund management companies. In position trading, they hold a big or a decent size of a position. They'll have either 1, 2, 3, or up to 5 position, and they will let it stretch for months or even a whole year. But usually, because we are going to take gold as an example today, gold, the shiny gold, the yellow gold, it's one of the fastest moving trading product. It's very crazy, it's risky, it's volatile, and we'll discuss how to make it least risky. Okay, and it's good for position trading as well. Reason being, because currencies a bit slower, they're also very volatile and decent products, but gold is aggressive, and the results which usually people try to achieve within the span of a year, in gold you can achieve it in a couple of weeks or months. Now let me give you a vision. I want you to understand something. In trading, the difference between regular trading style and investment trading style is as follows. Number one, in trading, the traders, the brokers, they are very active. They would do multiple transactions during the day, during the week. They'll be busy all the time, analyzing the charts, drawing their support and resistance all the time, changing their support and resistance. They will use technical indicators, and technical indicators are also not that consistent. They will give proper signal, they'll give false signal, and they'll give mixed signals all the time and consistently. Okay, that's what happens in trading. But when it comes to a trading style that is based on investment mindset, you must understand and accept. If you were to open any business today, any physical business anywhere in the world, usually and most of the time, the annual profit the annual profit after all the deductions, after the office bills, utilities, rents, employee salaries, okay, after all the depreciation of assets, most often after all the net profit is 20% net. If anybody agrees or disagrees, just let me know here in the chat box. Am I right? If someone was to invest in any business, usually the net profit, if you were lucky enough, now we can see globally all the economies were very much affected by the COVID-19. Many businesses got shut, right? But that's what a realistic return is, 20% per annum. If you go to a bank, you go for a fixed deposit, even in a South Asian country, they might promise you 20%, 17%, 15%. That is also subjected to tax, and they're even sometimes variable. All right. But that would be in local currency. But if you were investing in the American dollars, hardly annual returns, the net returns would be 6.5%. And that also keeps changing. The Federal Reserve of America, they reduced their interest rates, and I think it's now 4.5%. Even if you owned a real estate of a larger value, even real estate, they yield rents between 4.5 to 7.5% per year. So what we want to do, we want to learn here how to make things better, or how to go more than 20% a year. We're going to talk and discuss about that. Anybody disagrees here? Anybody agrees with me? Do you think when it comes to investing and without spending most amount of time, without being active, the annual returns are most often around 20% a year? Any disagreements on that? If no disagreements, then I'll move further. Is everybody awake? Guys, don't be, people don't feel shy. Give me an evidence that you're awake, you're active. 20% is a very good rate. Great. So we do have agreement. Thank you, Mr. Anob, Miss Preeti. Great, great, great. So 20% is good, right? No problem. I'll show you something cool. Now, thank you so much for your response. Let's go to the slides quickly. I'll go to the theory. I'll go through the theory part quickly, then I'll move to the technical part. Okay? So let's proceed. Introductory, we've gone through the disclaimer. We all know international financial markets are divided into approximately 5 major portions. The first portion is Forex markets. Forex means, it stands for foreign exchange. Forex markets are the markets where leading, well-known, famous currency pairs are traded. The two most famous currencies that are traded actively by retail traders are EUR USD. You can write it down if you want. EUR USD and GBP USD. GBP USD is also called cable. That's the nickname for it. Forex markets are 24 hours, 5 days a week. Saturday and Sunday, the markets are closed. The best thing about trading Euro USD or pound dollar, all these leading and dominating currencies, the cool part is that they are cyclical. What do I mean by cyclical? They do go up, they do go down. Okay, then they go up back again. So there is always going to be a center of gravity, a mean line or an average line in the major currency pairs that I've mentioned. What do I mean by the mean line? That if the price went above this mean line, it won't stay longer away from it. It would get pulled back in. And if it went below the mean line, okay, it won't stay that for very long. It will always get stretched back. And this is often how the Forex market behaves. The currency markets behave. But we are here talking more about Euro USD and pound dollar. The second type of financial markets are the energy markets. Energy markets are the markets where things like crude oil, Brent oil, natural gas, heating gas, they are traded. The third financial markets are precious metals. Precious metals are the type of markets where people trade gold, copper, platinum, palladium, silver. Okay, now here's a repetition. Excuse me for the mistake. Fourth type of markets are called index market. You've got NASDAQ. What is NASDAQ? NASDAQ is a combination. I'm telling you in a summarized way because I want to save time and I want to go to practical stuff. NASDAQ is traded a lot. It's quite famous here in Kuwait as well, the NASDAQ CFDs. NASDAQ is a composition of 100 technologically leading businesses. Tech companies like Netflix, like IBM, Microsoft, Google, Apple, Meta. These are the ones that are NASDAQ. The other index markets or index trading products other than NASDAQ are the Dow Jones 30 and S&P 500. And S&P 500 is a composition of 500 major leading companies that contribute strongly and have a heavy weight at the American economy. The last type of market is called equity markets. What are equity markets? Where shares of leading companies like Amazon, Google, Tesla, Netflix are traded. These are the major kind of financial markets. There are other financial markets such as bonds, ETFs, cryptocurrencies as well. If you're interested in trading cryptocurrencies like Bitcoin, Ethereum, and Ripple, feel free to contact our office in Dubai, and they will guide you and explain you what are the terms and conditions and requirements for starting to trade cryptocurrency CFDs as well. Okay, so I hope until now we've learned what are the type of trading styles like scalping, day trading, swing trading, and position trading. We've discussed the type of financial markets. I'm going to give you a small formula here. Let's suppose, assuming it was possible to earn 40. I'm going to give you an equation. If you want to take a screenshot later on when I'm done, you can write it down. Okay. Let's suppose it was possible to earn maybe minimum 40% a week. 40% a year. Example. This is just an example. Okay. Let's suppose. Supposedly, if someone has a salary, now we have to see those people who are looking for becoming full-time traders, who want to build a career out of trading. This is how some people use a calculation. People sometimes they assume they have decent amount of experience, they have a decent trading strategy, they spend good time on practicing demo, they learned a specific method, the results were good. So what they see is 40% should be, let's suppose, let's say it's annually, we could say maybe 50,000, assuming $50,000 could be said it's an annual salary. Okay, 50,000. So this way, traders who want to be full-time traders, want to get a career out of it, what they do is then they try to find out what is the amount of capital that they require to generate these kind of results. So it's going to be 100 divided by 40 and multiply by the annual salary. That would give them an idea what's the capital they need. Of course, it's just an equation. You can start with $500, you can start with $1,000, up to you. Okay, but this is not what I'm not trying to encourage people to invest. I'm just here to cover the educational gap. Okay, so you have the equation now. So it's very important to trade with regulated brokers. Why? Let's talk about what a regulated broker is. Trading with a regulated broker protects your hard-earned money. They operate under strict rules, ensuring your funds are segregated and you're less likely to be scammed by a fake platform. I'll tell you, many people, they don't know this. Let's suppose this is the regulator. What is a regulator? Regulator is a local authority within the country that supervises and monitors the activities of all the financial investment services type of companies. Okay, so assuming this is the first circle is the regulator, it's a government body. What they do, okay, they tell the financial trading companies that are under them, okay, let me draw the arrow as well. They would tell them, they would command them that the company, they need to have 2 bank accounts. This is just to explain you how your funds are safe. Okay. The first bank account is the company's bank account, the brokerage firm's bank account, which they would use for their bills, expenses, etc. The second bank account is client funds bank account, where the client's trading money is kept. So it has no relationship with the company's funds. This is how your funds are secure. And if you do have a question about this thing that I've explained to you right now, you can always ask me. There's no issue in that. So please try to trade with a regulated broker. Make sure that the regulated broker does have a physical office, preferably in your country where you're living, where you're residing, you're based. The regulated broker, if you go on their website, they would have on their website. Will you share this presentation with us? I'm not sure. Just contact your account manager, the person who invited you to this webinar. Just contact them for a PowerPoint. Okay. All right. So let me show you how to find if the company is regulated or no. Always, any company that is offering trading account services or asking you to open a trading account, okay, you must go to their website. So let me get the browser. I can't get the browser. Give me a moment. We'll go to the browser and we will use NCM Financials as an example. Okay, we'll use NCM Financials as an example. NCM Financials.com. NCM Financials is based in Dubai and they are ESCA regulated with category 1 license. How can we know? Always when you go to any website, you should go to the website's footer or about us section and they should have full transparent information. For example, here you can see NCM Financial Services regulated by United Arab Emirates Securities and Commodities Authority, ESCA under one category license. And we do have office in Kuwait as well. We are regulated in all countries. In Kuwait, we are regulated by the Capitals Market Authority, and our license numbers are also transparent. We are also regulated in Turkey, Jordan, and Labuan, Malaysia. Okay, this is one of the ways of identifying if a broker is regulated or not. Okay, let's go back to our presentation. So now we know what's the role of a regulated broker. We've discussed about NCM. What's the difference? Regulated brokers follow government rules. This means your funds are usually held in a securely, and they're held securely. There's a dispute resolution process if something goes wrong. If there was any issue, you have a complaint, you have something you need support with, you can always refer to the financial broker. And if they don't support or they feel something's not right, you can always go for a complaint with the regulator in the region. But with unregulated broker, there's no such oversight, and your money and your treatment is also is at risk in every way, ethically, financially as well. Okay. Now, what is investor style trading? This is a kind of a last slide. Then we will move to the MetaTrader 5 trading platform and we'll talk more about it. We learned type of trading styles. Now I'll tell you two types of traders. There are two types of traders. The first kind of traders are retail traders. Retail traders are often individuals like us, people who trade from their phones, people who trade from their laptops and computers. Individual traders are most often classified as retail traders. Then you have second type of traders. What is the second type of traders? They are institutional traders. What are institutional traders? You've got state bank, you've got central bank, you've got investment brokers, you've got private banks as well. These are the people who make up the markets. They're called market makers. They're the market movers. They are the market shakers. Why? Because they inject billions and trillions of dollars on daily basis to create fluctuations in the market. Okay. What is investor style trading? Investor style trading or position trading, that's the second name for it, is for busy people. It is a trading strategy that involves holding positions for longer period, often weeks or even months. This approach is ideal for individuals with busy schedules who cannot monitor the market constantly. Of course, we've discussed this before. Key characteristics of these style are: number one, when you make a trading decision based on an investment trading strategy, you look at the overall picture. People who use investment style trading strategy, what are the chart timeframes that they use? You can write it down. If you want to start trading a bit long term, you want to hold, you want to see the big picture, you must make sure you zoom out your chart. But the chart that you would use is minimum a 4-hour chart. Investment style trading strategy, the chart that it requires to be used is 4-hour. Daily or weekly is better, but 4 hours fine. 1-hour chart is just okay. It's not that reliable, but it's just okay. All right. Now, long-term perspective focuses on identifying what is the major market trend and holding position of extended period of time. So let's suppose you decided to trade gold today from an investment perspective. All you have to do is go to a 4-hour chart, zoom out, shrink it without any special in-depth technical analysis or without any specialized skill. Just zoom out just to see how is the chart looking like. Okay. For example, let's use a drawing trend. If you see the market has been moving in this way, this obviously means that the market is going up. No special knowledge or education needed to identify this kind of pattern, right? You've got a high, you've got a higher high, you've got another higher high. When you have 3 to 4 higher highs, it means the market is in an uptrend. The market is bullish. The buy pressure is more. The people are buying the fuel. I always say this in my presentations and training. Market, the fuel requires for a market to keep trending and moving towards upward direction is fresh injection of cash. When people dump money, when people invest more and more money, new cash comes in, the market keeps on pumping and moving towards the upward direction. But when people get scared because of any reason, political, economical, financial, even technical, when they're scared, they pull out their money. They remove their money. And when there's no money in the market starts to decline. It starts to depreciate. And here, what do you get? You get lows. You get lower lows, lower low. Each low is lower than the previous one. In a bullish trend, when the market's going up, you will also notice. If you want to write it down, go write it down. In a bullish trend, to understand if the market is going up, number one, you need higher highs. Number two, the quantity of green candles or positive candles should be more than the negative candles. Negative candles be red candles. So who is taking notes? Anybody taking notes here? Anybody? Let me know in the chat box. Are you taking notes? If you take notes, it's going to help you because these things, they will feed into your mind. And when it comes to practicals, things will be more easy. Great, Mr. Rupesh, Mr. Prasant, Anup, great. Nice to see people taking notes. Great, great. Okay, so first point, to know, how to know if the market is in an uptrend. First of all, you should have higher highs. Second of all, the quantity of green candles should be more. Third point, the length of green candles is also going to be more. The length is going to be bigger. You would see crazy aggressive candles rather than seeing this kind of small candles. Okay, you'll see more larger candles. You'll see larger moves. You know, that's how they would look like. Okay, we'll use a chart later on. Now it's only theory. All right. Let me look at your questions as well. Great, Mr. Nasir. Great. If the market is in a downtrend, if the market is going down, what are the hints? How do you know if the market is going down? You have lower lows. You've got a low, you have a lower low, you have red candles increasing. Red candles are more than the green candles. The length of red candles is bigger. It's the opposite of buy. So there are two kind of trends. There's an uptrend, okay, and there is a downtrend. The uptrend is called bullish market. The downtrend is called bearish market, in which you have lower lows. Then you have something called a sideways market. What is a sideways market? A sideways market is a type of market in which the trend is not clear. The market is stuck in a range. The market is confused. Buyers or sellers, they are either scared, they don't know what to do, and they agree to do business within a specific range. It's also called rectangle pattern. It's also called parallelogram pattern. It's also called consolidation. There are two definitions. Number one, buyers and sellers are scared, they're confused, they don't know what to do with in which direction they need to take the market. Okay. Second definition is buyers and sellers, they have reached an agreement that this is a fair place to conduct transactions. So now you know what's a bullish market, bearish market, and a sideways market. How you can know? By going to a bigger time frame, like a 4-hour chart, zooming out to know the direction. We'll use all of these examples today. Okay. Reduced trading frequency. In investor style trading, you take least amount of position so that you don't have to monitor. You don't take a bigger lot size. Okay, you don't use that. You use negative leverage. What is the meaning of negative leverage? Now, this is something a little bit going to be an advanced, but we can cover this. Most often, the brokers offer the leverage of 1 to 100 to 1 to 400, good regulated brokers. If it's more than 1 to 400, I wouldn't trust a financial brokerage of that type who are offering 1 to 1,000, 1 to 2,000 leverage. It's something really risky. Now, be careful from brokers that give you infinite leverage, because this is their way of making you trade more. The bigger the number, higher the risk. Least amount of leverage is much better. I'll explain you what it is. So in a negative leverage, you don't use the whole 1 to 100 or 1 to 200. You use 1 to 1 or 1 to 2 or 1 to 3. I'll explain you in more easy way later on. Do you have any questions until here? Any questions? If you want to ask, you want to ask on the microphone, you can ask me to unmute you. Because now we're going to move to the practicals. I've created a note here that this strategy is particularly suitable for busy professionals who want to grow their wealth over the long term without dedicating excessive time to. A decent leverage is less than 1/400. 1 to 100, between 1 to 100 until 1 to 400 maximum. Okay? So I hope I've answered your question. Now, requirements. You need MetaTrader 5 trading platform. I'll show that to you. And I highly encourage that you visit our office. We have a proper training center there as well. We have a physical location, customer service, sales, and marketing staff is there. So you go to NCM Financial's website here, and you can see here it's written, download MT5. Okay? So that's how you download MetaTrader 5. MetaTrader 5 is easy to use. You can learn it faster. It's available in multiple languages. It's very user-friendly. It is not so complicated at all. You need some technical indicators like Bollinger Bands, moving average, oscillators. I'm going to use this in front of you. I'll show you how to use this. I'll give you two definitions of technical indicators. The first definition is a difficult one. Technical indicator is a visual display of a mathematical formula. This is a difficult definition. It's a visual display of a mathematical formula. The easy definition, technical indicators are built-in tools. Technical indicators are built-in tools within the trading platform that help traders in identifying the market trend. Number one, they help you in identifying the market trend. And number two, they help traders in deciding entries and exit. Okay. For this method that we're going to learn today, a mobile phone is also okay. Laptop or computer is fine. Tablet's also fine. But it's, if you're a beginner, it's good to have a laptop or computer so that you can zoom, on a bigger screen. If you zoom out, the view is cool. You can get the bird's eye view. You need a demo account. Go for a demo account. Go for a practice account. Practice for some time until you have some confidence. Number 5, you need to have knowledge of the higher time frames. Now let's move to the practical stuff. And again, I'm asking again, if you have any questions, just let me know. So I'll clear things for you, because now we're going to go into the meat and potatoes. We're going to go for the main course meal. Any questions? Okay, now please write this down. Write this down. Number 1, focus and specialize in one trading instrument only. As a beginner, focus on one trading product and specialize. I cannot be doctor in the morning and I cannot be an engineer at night. You can always focus on one thing. Okay? Point number 2. After deciding what trading product you want to specialize in, calculate its average daily price movement. I call this ADPR. Now we are going to go through some difficult stuff, but inshallah, I'm going to make it very easy for you all. But you have to ask questions. Okay? Number 1, choose one product. Number 2, learn ADPR, average daily price movement, average weekly price movement, average monthly price movement. You know what does this mean? Now follow me. You have a cursor in MetaTrader 5, right? You have a cursor here. Let's find it. Here, you have a cursor here. Let me go to the 4-hour chart. This is the 4-hour chart. Okay. What's going to happen if I zoom out? I have zoomed out on MetaTrader 5. Okay. Keep in mind, if gold moves from 2600 to 2601, now you can either write it down or take a screenshot later when I finish. Okay. For me, this is considered as a 10-point movement. For me, some people call it 10 pips, some people call it 100 pips. Up to you how you want to phrase it. Okay. Then if gold goes from 2600.00, it goes to 2610, this is a 100-point movement. Similarly, if it goes from 2600.00, it goes to 2700.00. This is a 1000 points. Take a screenshot if you want. Maybe it's not clear because of the background, but you'll get an idea. And of course, you're going to get the recording as well. Okay. Okay. Now, is everybody with me here? What about others? Mr. Anoop, mashallah, you're very active. Great, Mr. Nasir. Great, great. Mr. Rupesh, thanks for confirming as well. What about others? Only 3 people out of our 11 participants have replied. Where are others? Till now going well. Great, great. All right. Now look. If you used a 0.01 lot, now I'm going a bit heavy, huh? If you use a 0.01 lot, it means the 10 points on gold on this lot size, it means $1 profit or loss. If it's in your favor, it's a profit. If it's against you, it's a loss. And if it goes 100 points on 0.01, this is equal to $10 plus minus. And if it goes 1000 points on 0.01, I'm talking about a small lot size here. This is $100. Is it clear until now? I have used the lot sizes for you. There are 3 kind of lot sizes. Okay, there are 3 lot sizes. 0.01, this is the smallest lot. It's called a micro lot. This is called 1 micro lot. Then you have 0.10. This is called a mini lot. And then you have full 1 contract or 1 lot. This is called standard lot. I'm not going to go into mini lot. I'm not going to go to standard lot. I'm not going to discuss the point sizes. Okay. So take a screenshot if you wish. I'm going to give you 5 seconds, then I'll tell you a trick. How to understand a trading product and how to define in advance worst case scenario. How to identify how much the market could crash or go in your favor. If you recall, I said something very important today. I said currencies, major currencies, especially like euro dollar or pound dollar, they are cyclical, right? Cyclical means they have a fixed range on a bigger time frame. They always get stretched back in, right? This is the behavior of these. But anything that's tangible, anything that exists in a tangible form as well, these things, they can be even shares of a company, it can be any commodity, you know, this stuff, they don't stay sideways, they often go up, they always break up, because everything becomes expensive over time, including the rents as well. Because of the current monetary system, you would see things like gold, oil, Nasdaq, they always tend to have on a bigger time frame a higher high, a higher high. They always go back up, even if they take a big dip like this one, like this one, like this one, like this one. Even if they take a big dip, they always tend to restore and make higher highs gradually over the span of time. Okay. Why did I mark these? Why did I mark these? These were marked to teach you to understand how much can market go against you, to have an idea, to make a conclusion, to make a decision. So which one of these looks like a bigger drop? Can someone help me here? Which one looks to you? There's no right answer, there's no wrong answer. Is this the biggest drop you have? Is this the biggest drop? Is this the biggest drop? Is this the biggest drop? Which one is it? Which one is it? Which one is it? Which one's the biggest drop? Can anyone tell me? Box number 1 from the left hand side, box number 1, 2, 3, 4, or the fifth one? It doesn't matter. You know why it doesn't matter? I'll explain you. The last one, the last one, the last one from the right hand side, right? Let's check. No problem. Okay. Now look, here's the trick. I'm going to take a cursor. I am going to grab a cursor. Here. I'll take this high, left click, hold left click with your mouse, stretch it down to this area. You can see, you see it says 17622 points. You have to remove the last decimal, okay? Gold crashed here by 1,762 points. 1,762 points. Let's write it down. Minus 1762. I'm going to shrink the size of the font a bit. How can I shrink it? Can't find the tool. Anyway, this is 1,762. Let's go for this crash. How big was this crash? Let's calculate it. This is the biggest one, 2,582. So I'm going to write it here. Minus 2,582. This one was the biggest crash. What information can I learn from here? If I was using 0.01 lot, each point, 1 point is 10 cents. Multiply by 2582. Open your calculators and work this equation out. If I was trading with 0.01 lot, this would be a loss of me if I had a buy from the highest point, from the top. If I took a buy of 1 micro, 0.011 position, this means I have a loss of a minus $258. Can you see that? If I had, for example, a $3,000 account, now I know if I use a 0.01 lot and the market crashed, it went against me, market start to tank down, I am fine. I'm in a safe zone. My account has the capacity of tolerating this kind of drop. Okay, so as if you are using investment style trading strategy without using any technical indicators, you can create your own layers. You can even calculate, you can use Excel sheet, or what you could do is just draw the lines. Just draw some equal lines, take best 2 trades, 3 trades, just hold them. Example, if this was a support, I bought a support here. Okay, example, I'm giving an example. Now I'm talking in regards to price action where you use the naked chart. 3rd entry, 4th entry. Example, I'm giving an example. So eventually, if I have 4 positions, here, you can see position 1, position number 2, market goes against me, position number 3. What happens? Because gold in the long term, in the long run, the ultimate trend always tend to stay in the above side. I was not taking short sell. What is short sell? Short selling is the opposite of buy. In short selling, you make money from the fall. Okay, so you can see later on this whole cycle, it went down, it shifted towards the upward direction. You can see if I was holding this position, I was holding this position and this position, I would be in net profit. Now I'm just giving you a summarized easy idea. Is it clear until here? Is this fine? Mr. Anub, I'll get back to your question of 1 to 400. Everybody, is this clear? Clear, right? Okay. Now, some people might not like the next thing. Okay. Why? Let me show you. Assuming it is a $3,000 account, assuming $3,000 account, and we're using 0.01. You see this move? This move, let's suppose it went here, right? Let's calculate this move. You know what it means? This move means it went by 171 points. No, 1,718 points. So on the last trade, this is $178. This is a $178. Example, I quit there. We're using just an example. Okay, $178. The second position I took here. The second position I took here. I also exited here because I saw this is a kind of resistance example. So I want to exit here. So let's assume I entered here. So this is 1,172 points. This is $117. $117. Let's say I only took 2 trades. Example. What's the total? It's around 386. Example, 386. Okay. But what was the duration? What was the duration of this whole move for it to correct? You can see here, it says 41 bars at the bottom. On the x-axis, you can see the move started from 14th November until 25th November. So almost kind of a week and a half for it to give us this stuff, this kind of results. But we were buying from here, right? We started to buy from here and we were able to get out here. This is approximately 31st of October until 25th, almost a month. The positions were there for approximately a month. We didn't take any serious or critical action, and you're just holding on to them. Investment trading style is a boring trading style, but it is worth it. You use smaller lot sizes, you calculate your things in advance. I believe in today's session, you were able to learn how to calculate what is the worst case scenario if the market crashes and goes against you, how it will have an impact on your trading account size and how you'd be able to handle it. There is more advanced training. I'll go into the strategy after this. I'll teach you one of the easiest methods, how to use it, a very simpler method. And later on, if you decide to become a customer, let me tell you everything. This is something very exclusive we're going to do in this webinar, okay? If you became a client with any of the NCM offices or branches, all you have to do, if you become a customer, you open an account and you deposited funds. All you have to do is tell your account manager, I need one-to-one training session with Mr. Mahsin Khan, because he said this in his webinar. This is something special I'm going to offer everybody, okay, to help you and coach you and teach you more advanced stuff. And even my advanced stuff is, by the way, easier. It's not that complicated, okay? Let me see if there's any question. Okay, no questions so far, okay? So everybody, my question now, khalas, let me just pause the screen and let me ask you all. Do you understand how much now the market will crash against you if you opened any trading product? Do you have an idea? The exercise that we did right now, you should be able to learn how to predict an approximated crash. Number two, how to do your money management, how much lot sizes to use, and if the market went against you, what would be your account situation, how to handle the risk. You don't need any specialized MBA degree to learn money management or risk management in trading. Even someone who is a technical literate, anybody who can use smartphones and computer and has an education even of 8th grade maths, they can also learn. Yes. By holding, yep. Is this clear? Is it clear so far what we've covered? So first thing, use a higher time frame. Second thing, whatever you want to trade and learn, use, calculate, analyze what's the worst case scenario, what's the biggest drop that ever happened, and then you have to have a defensive and conservative and sensitive mind. Little bit fear. It's okay to have some fear, realistic fear. It's part of the game. The money is being used, right? It's okay to be scared sometimes. Market is not clear, don't execute a trade. Okay, at least you know now. Okay, now how do investment style traders they trade? They make a decision in this way. They think, okay, if I enter the market right now, it can easily go against me by 2,000 points, and they would position their orders accordingly. Some people, they even do like this. Some people, they would do like this. For example, they would use a Fibonacci tool. Fibonacci is a bit complex. Let's not, I'll try to keep it easy. So here, they would use like Fibonacci tool like this. And on each of these levels, or on few levels, they'll just take 2-3 trades and they will hold them. They also do like this. Okay, we'll go to the method now. So shall we go to the method? Shall we go to the trading technique? Is it enough? Let's go to the strategy to make things easier for you. There are more than 5 methods to use investment style trading strategy, but because it's taking too long now, we finished 1 hour. I'm going to share one method today in today's webinar, and I would request everybody to go to Noorsiam Academy website or go on YouTube, write Noorsiam Academy, so to see our past webinars in Arabic and English as well. And whenever we have new webinars in upcoming future, you can also participate in them. I think our next webinar is going to be on Tuesday, 31st. No, markets will be closed. Probably we're going to do it on 24th December. Now I'm going to go to the technique. Then we will end the session and we'll go for question and answer session. So let's delete everything. This is the most easiest one. You go to insert, you go to indicators, you go to trend, then you select Bollinger Bands. Select the Bollinger Bands keep the default settings. You can change the color however you wish. Just increase the thickness a bit. Okay, just increase the thickness. Hit the OK button. Okay, then go again, insert indicators, trend. Okay, go back, Bollinger Bands once more, change the color. You can change the color any way you like. Change this from 2 to maybe 2 point. Make it 1.5. Better to make it 2.5. Okay. Like this. Can you see this? Now, please pay attention. I'm going to explain you. Bollinger Band is a technical indicator that performs very well when the markets are in trend. When the markets are trending, Bollinger Bands, they tend to produce decent results. However, it's not magic. It's not something bulletproof. It can give false signals as well. You have, what do you have in Bollinger Bands? You have zones. Let me draw it here for you and explain to you step by step. Assume this is a Bollinger Band, okay? There is a center band. This is called the center band. This is the outer band 1, lower band 1, and this is the lower band, sorry. You've got the center band, you've got the lower band, and then you've got an upper band. Okay? Center band, upper band, and lower band. Then what you have? You have additional lower band. You have additional upper band. Can you see this? You see this distance between both the upper bands, this distance between both the lower band, not lower band. Okay, this is called the decision zone. How to use this? How to benefit from this? The traders, what they often do, they let the price play around. Okay, they let the price go inside this lower band. When the price goes inside the lower band, what they need is a decent green candle. And when this green candle closes in the lower band, they would buy here. They would buy, and then they would use either the center band or they would use the outer band to exit that buy. Simple. Is it easy? Is it fine? Let's zoom out. Let's check here. Let's disable the auto scroll. You can disable auto scroll here to go back in the chart. Okay, you have a green candle here. This is your green candle. It closed in the lower band. Traders would take this as a buy sign. Even if it's touching here, this is the second buy. So you've got 2 buys. Okay, you've got 2 buys here. And later on, you can see the markets, they did restore. Yani if you're taking a buy this one, you can see here it should be, you can see it went to the upper band. When the market was in its favor, you would have closed here. If this was your lower band buy, you would have closed this one here as well. Some people, they avoid short selling on gold because gold overall trend is towards the upward direction. So we're going to look at buy examples only. Okay, now we'll discuss more examples. Let's go more. You can see here. Look, let's draw. This is the lower band. You have a green candle close. You have a green candle close here. Then you have another green candle close, but because they're very near to each other, you can skip this trade. Just go for quality trades. This is the second green candle, right? And you can see later on, when this green candle, it went to the upper band, it closed in upper band, it gave you decent amount of returns. And this one also closed in the upper band. You could have closed with decent amount of pips or points. Of course, the market does go against you, but if you're trading bigger lots, there's definitely you're going to wash out the whole account. But if you trade with negative leverage, with small position size, and try to stretch them, you would do quite fine. Now, here you won't get the trade every day. You would get it maybe once a week, twice a week. That's it. But it's not day trading, it's not scalping. But when you get a trade, it's going to give you a decent result. Okay. Take your time, download the Method 5. You have the steps recorded in this video. It will be available tomorrow on our YouTube channel. Okay. And you can see how you had a green candle here as well. You had a green candle here as well. Okay. There are more advanced methods of trading this strategy. So today we were discussing the investment trading style. So I think that's more than enough for today. It's a decent introductory session. So we're done. Let's have some question and answers. Please, let's conclude our webinar and let's go for the question and answers. If you have any questions, you can ask me over the microphone. Just raise your hand or write in the chat box, unmute, and I'll unmute you. You can ask me your questions. So Mr. Rupesh asking, is 3 months chart so? Is it 3 months chart or so? What do you mean? I didn't understand your question, Mr. Rupesh. Do you mind it explaining more? If you zoom out, maybe you'll get 3 months, 6 months, 1 year. It's okay. You can even go to the daily chart to get maximum data. Everyone, do you have any questions for me? How was today's session? Did you learn something different? Did you learn something new? Which one is the trading product for beginner? For you as a, in my opinion, pound dollar is okay. Gold is also okay. Whether you're beginner and expert, for this method, you need a small lot size. But I would suggest try gold on demo account. Get a grip on gold. Bollinger Band part for another instrument, if possible, please. The settings for Bollinger Bands is same. Whether you use currencies, whether you use gold, it's the same. Yes, Mr. Anoop. What's your question? You want to come on the mic? Miss Maria, what lot size is advisable? Lot size will change. It will always change. But try to start with 0.01 on demo. Try to get a grip. What is the use of ADPR? Is it same as... No. Average true range is just telling you what's the daily price, how much the price fluctuates daily. The average daily price movement, you know, it helps you, average daily price range. It helps you in just understanding what is the biggest move the market makes and up or down, so that you can know what should be your realistic expectations. How much, like you analyze, you use the historical data to analyze how bigger were the crashes. If you leverage, this calculation will work. Yeah, just start with 0.01. Since this is just a level 1 training, just start with 0.01 experiment. But experiment in a structured and disciplined approach. See, the definition of success is few simple disciplines practiced every day. This method requires hardly 25 minutes a week. It doesn't require specialized news subscription, going for detailed advanced technical analysis. You have 2 Bollinger Bands. If the green candle closes, it closes. If it doesn't close, you don't do anything. You're flat. No trading is also trading, you know? Okay? So, I don't mind taking questions. Any further questions, or shall we end the session? So no questions are being asked. Thank you, everyone. Thanks for your participation today. Let me see if I have anything extra for you on the slides. Let's go back to the slides. Can you see my screen? Okay. So no worries. If you have any questions related to our training today, it's training@noorsiamacademy.com. If you need any help in opening accounts, if you want to go for more training sessions, you have more queries, you want to know more about the company, you want to visit us and see, do we really exist or no, feel free to contact the number that's available on the screen right now. Contact your account manager. And I wish you all a lot of good health I wish you all and your families a lot of good health, wealth, and success. And once again, thanks for your time. And we'll be in touch. More webinars are coming soon. Have a great evening and bye bye for now.